So the thing about value investing is this. If you practice it, you can expect a 15 to 25% per annual return. And how many things to learn? Two things only. You first got to understand the difference between what is valuation to what is a price. Okay, so there's a difference between these two in terms of valuation and a price. Let me give you an example. Okay, so in terms, let's say in a property, but before you, I believe most of you would actually have somehow bought a property, you know, a house for yourself to stay. So when you want to buy a property, first thing you want to ask before you offer a price is to ask for the property valuation, correct or not? So you will actually ask, you know, this banker, maybe this particular house is worth $1 million. The other one say, oh, maybe $1 million. Then the other one will say $1 million. Also, you roughly know the valuation is $1 million. And you decide for yourself the price. Maybe you think the house is worth more than $1 million. You put a 1.1 million. Then you think the house is not worth $1 million. You actually put in a price of 800K. So similarly, this format should be used also in stocks. Let me ask you, let's say right now, there is a particular house, and this house is situated in a strategic location, okay? And this house valuation of all bank give you 1 million. And let's say the couple, because they want to have a divorce, you know, they want to see each other soon, and they want to really get rid of the house fast. And you have money, you can take up the loan, and most importantly, the house not haunted, right? Well, you're actually, and the seller now offer you 500K. Would you buy the house? Definitely, you would buy the house, right? Yeah, because it is undervalued. Okay, so this is the same theory when it comes to stocks. All right, let me give you an example. Let's say I believe many of you have drank this drink called Milo before, right? Yeah. Let's say right now you have been drinking Milo. Milo owned by which company? Nestle, right? And Nestle is now listed in the Bursa Stock Exchange. Okay, so the thing is this. Let's say touch wood. Now you can hear, let's say the terrorists, US got a terrorist attack, and a lot of important buildings, and this not only now do they bomb the Boston, they now bomb the White House, the Pentagon, and then touch wood. Let's say there's also the Euro debt crisis coming. Apart from Cyprus, the Italy, the France, and other Greece, all the countries said they cannot pay off their loan. Now Europe is going to a Euro debt crisis. With these two news coming, let's say, touch wood, what will happen to the stock market? The stock market will crash, right? And let's say because of this news, Nestle, the share price drop. Let's say from 60 ringgit drop to 40 ringgit. Hypothetically, let's say. Well, let me ask you this question. The next day, do you think people will stop drinking Milo? Do you think the next day people will stop drinking Nescafe? No, right? So they will still continue to drink Milo, Nescafe. Do you think the Nestle, their revenue profit will drop overnight just because of this news? No. Okay, so because of this, let's say you understand the business model of Nestle, you know how to calculate the valuation price of Nestle, and you realize Nestle, the valuation is worth 60 ringgit. Now drop to 40 ringgit. Would you be happy? Yes, of course. Why? Because you are buying something right now that is under its worth. So the thing is this, when we practice value investing, all right, we make sure we know the value of the business or the stock that we invest in. We do not take chance. All right. So I know a lot of people like to take chance to say, you know, they buy $1 ringgit today and pray hard, tomorrow it will rise up to 110. That's called speculation. So that's not called investing. Okay. So if you want to learn how to do this value investing, we have a concept called the 3R concept, whereby a very simple method. We do value investing. We only buy when the 3R meet. First is right business model. We make sure the company definitely has got the right business model, managed by the right management, and when the business model and management is right, I can tell you, valuation and the numbers will definitely be okay. All right, so let me just give you the more details what we see in the 3R. First,